Hemang, since you were just talking about the summer and the heat wave that we might experience, and already some parts in the country are undergoing that, give us some sense on the power space as well, because that's a connected sector. And what we are understanding from the reports, they are suggesting that it's not just the demand that is holding up and is expected to surge from here on, but even the pricing power is back and the prices are stable right now. Give us some sense that within the power space, what's been your read through as well as any of your top bets?
Typically, you do experience, much better growth for the power generating companies, because the demand typically tends to pick up during the summer months. And these stocks also have corrected in the last 4 months along with the market. So I do like, some of the names like Tata Power, NTPC, maybe some of the other, I have already touched upon the power generating companies, the engine companies like Cummins and Kirloskar Oil. So I do think that Tata Power and NTPC are relatively better placed, because apart from the core power business, they also have a significant investment in the green energy, in the renewable part, where there is going to be a good amount of excitement with growth being there. Definitely, I think next, at least for 3 to 4 months perspective, the operational performance of these companies would be very good.
Let's bring out the stock price of Paytm. Motilal Oswal has come out with a very interesting note this morning, which we were flagging off earlier as well. They're talking about as to how their merchant business is gaining traction. They're saying that they estimate the EBITDA to achieve break-even by FY27. The contribution margin is going to remain steady, according to them, at 57% by FY27. They're saying that the reduction in capex, depreciation expenses, along with strong cost control, should help deliver Paytm a positive adjusted EBITDA by the Q4 of FY25. However, they remain watchful on the challenging macro environment and traction in the financial distribution business in the near term. UPI market share is something that they're keeping on their radar in any case. Hemang, what's the sense that you're getting about Paytm? It lifted off from those lows, but it's been stuck around the 760 range for quite some time now.
So, Aisha, operationally, company seems to be doing much better after that, big shocker that we had maybe a couple of years back. And on most of the parameters, whether you look at UPI, their, GMV, flows and the traction, all of that is looking quite interesting. The only thing is that one is not really sure whether you will see, some big, companies getting into this, something like a Bharti or a Jio or any other company, maybe Adani Group. So that part is something that is not very clear. If you see a big investor coming into the company in the near term, that could be a very big trigger and a re-rating, for names like Paytm. Otherwise, yes, from a pure platform place, this could be an interesting stock to look at, because you have, so much to offer in terms of companies when it comes to quick commerce or food delivery. But fintechs, you don't have very established player as such. So I think from that perspective, Paytm does look attractive.
If you like this video, then like, share and subscribe to ET Now.